Welcome back. You're watching Closing Bell, and let's invite in the show Rupen Rajguru, Head of Equity Investment and Strategy at Julius Baer on our show. Rupen, afternoon, and thank you very much for joining in. What have you made of this market? It's been in an uptrend. We had a little bit of a wobble in April, but the way the markets have rallied on, we've not had a single correction, any meaningful correction at least. And we've been arguing, experts like you have been arguing about how valuations are on the higher side. The pockets of value have come down, but the force of liquidity, domestic and foreign, has been fairly strong, and that continues to push up the markets. So how would you approach this market over the near and medium term now?
Afternoon, Reema. I think this is a million or $1 billion question. And I think a unique feature about this current market, and if I were to compare not only India, but say a US market, it is that it's a very calm market with a strong economy. So what's happening is that we haven't seen any volatility, or for that matter, even any significant drawdown in this market. And if I were to just juxtapose that with an Indian market scenario, post-COVID, there hasn't been a single month in which the Nifty is down more than 5%. Right? So we have had a 4 year of a bull market. So we have had bull markets in the past, but in the past we have always seen a drawdowns which can be as high as 10 to 15% from the intermediate peak. And just to give you perspective, between 2003 and 2007, there were at least 6 to 7 instances in which market was down almost 12 to 15% from the intermediate high. But in last 4 years, we haven't seen something like that. So what happens typically in times like these, people do let their guards down and try to invest into something which is speculative or which has a lot of momentum, which typically does not end well. So right now, some segments of the pockets are in that zone in which it is having extreme high valuation. But at an aggregate level, Indian markets valuations have not gone into that terribly high market. So our view is probably from a best case perspective, market should at least for next 3 to 6 months do nothing. Index should probably give hardly a couple of percentage returns and let the earnings catch up happens, and then it would be a better sign. So to answer your question, we are in a bull market which is extremely high on liquidity, and we haven't seen a correction. So personally, I would like to see a healthy correction, but the power of liquidity is very, very strong, and it's not happening.
No, absolutely. You put it, Rupen. Afternoon, Prashant here. I'm just going to come back to you, but I want to highlight just one more story. When this is important, I mean, this is something which perhaps is going to be watched closely. I'm talking about the GST Council meeting which happened, and this is not about what basically did happen. I mean, if you can pull up Delta Corp, the stock was down about 4.5%. It's been down about 5.5% since the morning. So, and there's been disappointment because there was some quarters expectation that the council will provide relief and in terms of their taxation. That has not happened. But there is a new amendment which is being introduced, which perhaps opens up visibility that in the future there could be a ray of hope. And I'm just mentioning Delta, but this is not Delta specific. This is not companies A or B specific, but companies which have been hit by retrospective GST demands could perhaps expect some relief. That's the point here. Timsy is going to tell us how this may happen. Timsy, afternoon, over to you.
Well, it was a power-packed GST Council meeting, and we did see the Council approving a crucial amendment to the law by bringing in Section 11A. And now sources tell us that the government is likely to introduce the Council-approved amendments, that is the law amendments, in the current budget session of the Parliament for passage. These amendments include, as I said, introduction of Section 11A. Now, let me first bring to you what Section 11A is. This section says that the sectors which paid GST at a lower rate as compared to that was applied by GST authorities may get relief from the retrospective action. It also says that not to levy higher GST when lower rate was paid as due to a general trade practice, and not just by one company, as you mentioned, by the entire industry or that particular sector. So all the companies in that sector paid GST rate at a lower rate due to lack of clarity, or there was no sort of a vision given in the council or through the laws. So Section 11 also says that to offer companies relief from retrospective action for lower tax rate payout, it empowers the GST Council to consider not raising retrospective tax demand where industry paid lower GST rate in absence of clarity or a specified rate. It also says do not allow refund of GST or cess arising in cases where higher GST demands have been paid by the sector. And now sources also add that after Parliament nod and notification of this particular Section 11A, it can be used after sector-based discussion in the GST Council as and when required. This particular section also gives a legal backing to the government to use this as and when the council decides for a particular sector. So this could bring in relief for a lot of sectors. But yes, as and when the council decides to take a call, takes a review of that particular sector, the council unanimously decides that yes, they need to be given a relief, that is when this particular section will come into action. And this is something that the industry was actually waiting for, and even the council and the authorities, because a lot of these demands were running into litigation, and this is going to help the government and the industry both.
Okay, all right, Timsy, thanks very much for that. You know, the point is, this is, I want to once again emphasize, this is not for, one sector or another sector. This is, this can't, and we don't even know if the government will, or not the government will have to pass it through Parliament in the current session. So that may happen. But then after that, the GST Council will have to discuss if this has to be used to provide relief to Sector A, Sector B. And of course, since one of the most talked about sectors which has been hit by these demands has been the online gaming and the casino sector, right. I mean, that kind of comes into sharp view also because, I mean, you've got listed companies there. That's the connection that we're drawing. We're not saying that this is being done to provide relief to these particular companies. So, I mean, that's just a short caveat here.
Yeah, a caveat well taken. And also on Delta, there are two things. One is the retrospective GST demand notices that were there from the GST Council of West Bengal. There were some in Tamil Nadu. All of them clubbed together in Supreme Court to the tune of over 20,000 crores. The company had made no provision for that anyway, because they did believe that they would get some sort of relief out here. That's what they were advised by the lawyers. We had the management of Delta Corp come here and tell us. So even if that were to happen, that would merely be a sentiment positive, because there was no write-off that happened and comes back into the books of the company. That's point one. And secondly, the bigger issue for them was the 28% GST that that was imposed on the face value of chips at the entry, and that is not changing. So that will be a deterrent. So structurally, the only positive, if at all, it comes from this, and this is largely, because we're speaking about Delta, the rule does not imply that it is specific to one sector or company. If that were to happen, it would at best be a sentiment positive, largely because the company hadn't made any provisions for this in the first place.
But I'll tell you one thing, Mangalam. The provision in accounting terms, it may not change very much. But if that were to happen, I mean, this if the government were to use this to provide relief, I mean, the price will not be 136. I'm talking about the share price. I mean, provision, not provision, that's an accounting thing. That's that is, there's no right back, as you said, because they did not provide it in the first place. But of course, I mean, it's going to be material, very material for the share if that would happen, which we don't know if it will or not. But we just wanted to highlight this, especially because we had two experts in the morning with us from PwC and Deloitte, who essentially told us that this does open, offer a fair bit of hope to not just this company, but others as well who've been hit by these demands. Markets up about 28 odd points or so. And I think I just want to take a quick look at the market breadth as well, which is now almost 1:1. So 1340 stocks are higher and about 1300 stocks are lower at this stage. Rupen, just a quick sense on, a lot of we're seeing foreign brokerage, not just foreign brokers, but essentially the sell side going down the coverage universe, right? Because I guess for large companies, A-group companies, you've got 30, 40 brokers covering. I mean, there's almost saturation, not in terms of potential for share price appreciation, but in terms of coverage. So people are going down the list, right? I was mentioning Mapma India came into the radar last week. Small company, bigger company, TBO Tech today. Just wanted to get your sense. What do you make of it? And what does it mean for these companies? Does it, does this mean more participation, more funds, both local and foreign, into these companies as they get covered more formally by these brokers?
So Prashant, when market is in momentum, definitely idea is something which everybody is hunting for. And probably now in India, there are unique companies or companies which participate in a unique theme. So a couple of companies which you mentioned, while on valuations, definitely we can always debate whether it is comfortable or not. But they are into unique things, doing unique things, which there are not many other alternatives available. So in a way, in fact, it happened with a lot of internet companies. If you see, practically all the sell-side brokerage house have coverage on internet companies which have done well. So a lot of the new themes, I think a lot of companies have also looked into defense as a sector and initiated coverage on that. So here, it is a lot of the brokerage houses are breaking out from their traditional comfort zone of large caps, known names. And FPIs as a category of investors are also looking into unique ideas. So to answer your question, these kind of the market being in current momentum, people will hunt for more and more such ideas, and probably you will see more unique coverages coming through. The only caveat is if the market sees a significant drawdown, the interest level in all these will come down significantly. So as far as the interest or the market momentum continues, you will see more and more such ideas getting initiated by the sell-side brokerage.
Phillip Capital has also initiated coverage on TBO Tech today, and their target price is 2,080, valuing the company at 55-56 times FY26 PE. So 1 year forward, 55-56 times in terms of the valuation. Rupen, you used the word drawdown. What can cause a drawdown? You've posed a question, right? Will the budget be a catalyst to prick this enthusiasm? Where do you stand on this?
So, Reema, I'm sure a lot of people on your channel would have come and expressed, and in fact, not only experts, but also RBI, as mentioned about the way the kind of activity which we are seeing in the derivatives markets in India. It is significant. In fact, it is a couple of times the size of India's GDP, the notional positions in the futures and the option market. Plus, as I alluded earlier, the big category of investors, the number of demat, which probably pre-COVID was 4 or 5 crores, is now gone up to 14 crores. So that clan of people have not seen a drawdown, and they are constantly investing in a lot of the narrative stocks. So some of the SMIDs, microcaps, SME exchange. So probably in the budget, if there is any regulation which comes as far as F&O market is concerned, so which can be higher eligibility criteria or something more on the higher margins required for writing options, definitely that will can have an impact on the overall sentiment, and that can also lead to a little bit of liquidity squeeze out there. So we don't know, but there is a possibility, because now the next big event which the market will be focusing would be the union budget as far as India is concerned. So any regulations to that effect might see a drawdown, and which can see some healthy correction in the market. So we don't know, but there is a possibility of that, because both RBI as well as SEBI has in the past cautioned about the kind of activity which we are seeing there.
Rupen, always a pleasure speaking with you. Your sector calls and preferences up for our viewers on the screen as well. So we'll leave it today at this, and come back to you on another day as well with more views on more of your views on the market itself. A bunch of stocks